The capital, it may be in the form of debenture, it may be in the form of shares, or it may be in the form of equity as well as preference. What is EBIT? Earning before interest and tax. Undistributed controlling means the controlling part will become easier in the capital structure. Hello everyone, this is your Adarsh sir here, lecturing Vidhyaashram First Grade College, the Temple of Excellence. And we are in the session 4 of topic called, your unit 4, session 1, topic called financial management as well as capital structure. Now we are in the first unit of your topic called capital structure. Now, before we go to problem, actually we will understand what is capital structure. Now, you know that what is capital? The investment we call it as capital. The capital, it may be in the form of debenture, it may be in the form of shares, or it may be in the form of equity as well as preference. Equity, preference, debenture, all put together, we call it as capital. Now, capital in the sense investment. Now, cost of capital we have done in the previous session, our previous unit. Cost of capital means whatever investment you made or you are going to make. On that, how much you are spending. Like, if you are borrowing 10 lakh means how much you are spending for 10 lakh. How much interest you are paying for that. That is called cost of capital. What is capital structure? We have to structure that. And so I'll explain you with the format and with the contents, then you will understand better what is capital structure. So the agenda is very simple, meaning as well as concept. So these are the meaning of capital structure. Now, capital structure is a particular combination of debt, equity used by the company to finance its overall operations and growth. Debt comes in the form of bond issue or loans, while equity may comes in the form of common stock, preference stock or retained earning. Now, so these are the information actually you have, but remember capital structure, how does it work? So before you go to capital structure, you should remember that you have equity, you have debentures, and you have preference shares. So total we have 3 types of investment. One will be equity, debenture as well as preference shares. Now, debenture holders normally we give interest. Preference shares normally we go for dividend, and whatever left out, the left out dividend will be given to whom? Equity shareholders. Equity shareholders are called as real owners of the company. Now, in this, I'll go to format. Later, I'll come back to all this. This will be your format. So, your format to do calculation. Now, particular, you have option 1, option 2, option 3. Total, we have 3 options here in this. EBIT. What is EBIT? Earning before interest and tax. Remember, before interest and tax. This we call it as EBIT. EBIT stands for earning before interest and tax. Now, so EBIT minus interest, you will get what? EBT. For example, you have 3 options here. Just assume that this is equity, this is preference, this one is debenture. Now, what happens? EBIT. EBIT means what? Earning before interest and tax. So, interest not yet deducted, tax not yet deducted. Now, minus interest. After minusing interest, you will get earning before tax. Tax has to be deducted. From that, you are supposed to minus tax. You will get net earning to the equity and preference. Once you are given to preference shareholder, we have to give them dividend. After deducting dividend, you will get for net income. Hope you are clear. Now, this happens where if you have debentures, you have to pay interest. If there is no debenture, no interest. Clear? Now, if you have preferences, you are supposed to minus dividend. If there is no preferences, no dividend. Clear? Debenture holders will get interest and preference shareholders will get dividend. Now, I'll go one by one for this. Just assume that you have debentures. You have what? Debenture. You have taken 10 lakh from public as a debentures. Now, you have to take EBIT, some amount you have to consider. Minus what? Interest. Why interest? Why? Because he is a debenture holder. I am showing one by one. After debenture, I'll go to preference. After that, I'll go to equity. Now, EBIT minus interest. You are deducting this. You will get EBT. Just assume that this is 100 rupees. The interest 110 minus interest 10 rupee. It has become how much? 100. EBIT is how much? 100. Now, minus taxation. Just assume that 30 rupees is tax. How much now? 70. This is nothing but earning to equity and preference shareholder. Earning to equity and preference shareholder. Earning to equity and preference shareholder. How much it is? 70 rupees. Now, this is done. After this, what happens? 100 minus 30, it is 70. After this, what happens? Minus preference dividend. Minus preference dividend. So, what we have taken? Debenture. Do we have preference? No. This will be blank. Your answer is how much? 70. Hope you are clear. Yes. So, this is what net earning available to equity shareholder. If there are any old equity shareholder, just assume that there were 10 equity shareholders are there in the company. How many shareholders are there? Equity 10. Your profit is 70 divided by 10. Your answer is how much? 7 rupee per share. This is earning per share. EPS, earning per share. Hope you are clear. If your problem is about debenture, you have to take EBIT minus interest. You will get EBT minus taxation. You have to minus taxation. You will get earning before giving to equity and preference shareholders. Then minus preference dividend. Because of debenture, there is no preference dividend. Your final answer is 70. In your problem, the existing 10 equity shareholders are there. So 70 minus 10, your answer is 70. Hope you are clear. If your problem is debenture, you have to do. This is only called as capital structure. That's why I did not explain you in the beginning, because you will not understand if I explain you with theory. With problem, if I explain you, you will understand better. Capital structure means what? You have to see whether it is a debenture, whether it is an equity, or whether it is a preference. If it is a debenture, you have to check how to take this. Hope you are clear. Yes. Now, so after debenture, I'll go for preference shares. Preference shares. Preference shares, how it works, like same to same, it will go like you have EBIT, yes, EBIT, just assume that 110. How much is EBIT? Or else you assume it is 100 itself. How much? 100. Now, minus interest. Do we have interest here? No. because ours is preference shares. In the beginning, I told you preference shareholders will get what? Dividend. Debenture holders will get what? Interest. Now, preference shareholders will get interest. No, they will get only dividend. 100 minus 100, it will be 100 only. Clear? Yes. Then minus taxation. Tax, just assume that 30%. So it will be how much? 30. How much it is? 70. Hope you are clear. Yes. After this, what you have to do? You minus dividend. Why dividend? Why? Because it is preference shareholder. Now, 70 minus 20 rupees dividend, you will get answer of 50. This, just assume that you have old 10 equity shares. 50 divided by 10, you get answer of 5 per share. Earning per share is 5. In case of preference shares, it works like this. Interest part will be 0. Your answer is 100. Tax is 30%. Deduct, you got 70 minus dividend on preference shares. It is 20. 70 minus 20, you got answer 50. Now, 50 divided by number of shares are what? 10. 50 divided by 10, you will get 5 rupee. Hope you are clear. Yes, this is all about your preference shares. Now, just assume that you have taken amount from equity shareholder. In case of equity shareholder, just assume equity shareholder. Your EBIT, how much? EBIT is 100 minus interest 0 minus tax. So it will be 100 on the 30% tax. It will be 30. It will become 70. Clear? Now, on that 70, number of equity shares, there is dividend. Dividend is how much? 0. And 70 divided by 10, your answer is 70 earning per share. Hope you are clear. Your earning per share is 7 rupee per share. Now, equity means the interest portion will be 0. The dividend portion will be 0. Interest given to whom? Debentures. Dividend given to whom? Preference shareholders. Hope you are clear. Yes. This is all about your format. Just look at your format. Your EBIT minus interest, EBIT. You have to mug up this format. Minus taxation, net earning to equity and preference shareholder. Minus preferential dividend, you will get net earning available to equity shareholder. Any doubt? No doubt. You got final answer. Take final answer, divide by number of equity shareholder. You got your final thing. Number of equity shareholder in the sense, as I told you, 10 equity shareholder. In your problem, they will give you 1 lakh equity shareholder, 10,000 equity shareholder. Never go with the value, go with the number of equity shares. Okay. Hope you are understood. Yes. While doing problem, you will understand better. Now, just remember the concept. Now, you understood what is capital structure. Capital structure means equity shares, preference or debentures. We have to check one by one, which will give you more earning per share. Now, importance of capital structure. What are the importance of capital structure? Like, it increase in the value of the firm. For example, because of your capital structure, the value of the firm will be increased. If you have capital structure means the balanced one, like your earning can be known every time. Like without capital structure, you cannot find out your earning per share. Your earning per share, you can get to know with the help of this capital structure. First point is over. Second, utilization of available fund. You have debenture, you have equity, you have preferences. Whatever fund you have, you can utilize properly. Maximization of return. Your return can be maximized with the help of your capital structure. Minimization of cost of capital. See, after doing this, you got to know that the debentures will give you more return. Then what you will do? The preference has to be converted to debenture because the return will be high and cost will be less. Solvency of liquidity position. So, Normally, if you follow this capital structure, the winding up of your company will be less because you know that what is the exact position of your company. Flexibility. Normally, capital structure are very flexible actually. Then, undistributed controlling. So, undistributed controlling means the controlling part will become easier in the capital structure. Then, minimization of financial risk will be less. So, I am not going in depth. I am not explaining like what is undistributing, what is risk, everything I am not explaining. Why? Because this is your 5-mark question. 5-mark question, the heading with 5 points is sufficient. That's why I am not explaining anything. Even though I explain also, it is a waste of time for you as well as for me. In your examination, whatever I am teaching here, it is mainly for your exam. If you are planning for 80 out of 80, write heading, write what is capital structure. Below that, importance of capital structure, write 5 to 6 points. Over, you will get 5 out of 5 marks. Never write any stories for points. If you know properly, write. Or else, never go for try of writing stories. Now, concept. Factors affecting capital structure. What are the factors are there which affects capital structure? Like the nature of the business. See, the capital structure is not same for everybody or all the company. It changes, depends on company's nature. First one will be the nature of the company. Second, regularity of earning. Like the few business are there which works on seasonal basis. The few business which works on seasonal basis. What is a seasonal basis? Like your umbrella. Can you sell umbrella all 12 months in a year? Can you sell umbrella? Hope you may sell because the people use umbrella in case of rain and in case of summer also. But what about raincoat? Raincoat, have you seen anybody using raincoat on occasion of summer? No. On occasion of this thing, rainy season, yes. So, only during rainy season, the raincoat can be sold. But other season, the raincoat will not sell. And mango. What is the season of mango? During the month of March, April, May. So, there is a huge demand for mango. Can you sell mango in the month of October? Can you sell mango in the month of January? Absolutely no. Absolutely no. We cannot sell mango in the month of Jan or October because those are seasonal. Similarly, regularity of earning will not be there in your business. That's why your capital structure depends on your regularity of earning. Next. Conditions of the money market. What is the conditions actually? I'll give you best example. See, so you have a mobile in the market. Some XYZ brand is yours. Now, you are selling that particular mobile, but at what price? 30,000. At the same time, the same pattern, same thing, the better branded mobile, they are selling at 25,000. The people, what they will do? Will they buy your mobile or will they go for branded mobile? Yours is XYZ brand. Another person is selling popular brand. Then your mobile is 30,000, but that branded mobile is 25,000 with same feature. What happens then? The people will rush to that mobile. Why? Because condition of the money market. The market is always volatile. It is always dynamic, keep changing. That's why we cannot trust anything. Now, attitude of the investor. Investor, what happens? Sometimes they are very much interested in investing. Sometimes what happens? They will not take interest in investing. The attitude also matters for capital structure. Then, debt equity means. What is debt equity like? You need 10 lakh, take 7 lakh from equity, take 3 lakh from debenture. This is called debt equity. Means mixture of more than one sources of finance. Debt equity preference like that. Hope you are clear. And we have ratio also for debt equity ratio. So You don't have ratio in your syllabus, or else I would have explained you what are the electric equity mix. So these are the things we call it as factors affecting capital structure. You understood what are the importance capital structure? If you want, please take screenshot. So these are factors affecting capital structure. The last part, capital structure. How your problem will be? Your problem will be like this: capital structure with equity share only. Sometimes your problems comes only with equity shares. Now, capital structure with equity and preference shares. Like you need 10 lakh, 5 lakh from equity, 5 lakh from debenture. Option is yours. Capital structure with equity and debenture. I told you 5 lakh equity, 5 lakh debenture. This one 5 lakh equity, 5 lakh preference shares. No matter of interest in this because there is no debentures. Capital structure with equity, preference and debenture. Equity, if you want 10 lakh, take 3 lakh from equity, 3 lakh from debenture and 4 lakh from preference shares. These are called as your capital structure. While doing problem, it is very interesting actually. So we'll do all kinds of problems in your classes. So these are your format. You have taken screenshot, I think. I'll remove these things so that you can take the clear picture. So these are format. Please take screenshot. Your all problems are based on this format. Yes. This is all about your today's session. Today is all about theory. That's why it is the shortest session actually. But next session will go with problems. So interesting topic, as well as for your examination, you will get 15 marks from this problem. Please go through all the theory part, what we have done today. Try to remember all the points like factors, importance, and your format. Thank you.